Think of a cheetah. Okay, a cheetah doesn't basically wake up every day and immediately start killing everything that he sees, a rabbit or a gazelle or anything like that. Take it all back to his cave and throws a big party with all of his friends.
Uh,
You don't have to learn to trade alone. Welcome to the Trading Lifestyle Podcast, where we interview professional currency traders and industry experts who can help you improve your trading and your life. And now, your host, Hugh Kimura.
Hello traders, this is Hugh Kimura, and I know it's been a while since we did the last one. I apologize for that. But this year I'm committed to doing at least one interview a month. So be sure to keep an eye out for those interviews. You can subscribe on iTunes or on my blog. Before we get started, I know you've heard this before, but I have to say this. This podcast is for educational and entertainment purposes only and is not investment, trading, or financial advice of any kind. Although in this episode, there might be some advice on how to bake a cake. As you know, Forex or any type of trading is very risky and you could lose all of your money. Seriously. And finally, past performance does not indicate future results. Alright, now on to the show. In this episode, I sat down to chat with Steve from NoBrainerTrades.com. He has been trading professionally for about 7 years, and I personally believe that he has one of the longest running and highest quality free education websites out there when it comes to Forex trading. So I was really happy to sit down with him and find out what makes him tick. We get into some topics such as how he trades, where he thinks are the right places to get trading education. And he has some great tips on where to find a trading peer group, something that's pretty important so you can have people who help and support you in your trading. So without further ado, here's Steve. Hi Steve, thanks for coming on the show.
Yeah, thanks. It was nice of you to ask me to have me on here. I appreciate that.
Yeah, I've been following your blog for a while, so I was really excited when you agreed to do this interview. Well, there's already a couple of good interviews of you out there online, so I don't want to rehash that stuff.
I don't talk very often. I'm not a big, yeah.
Well, we're honored.
Oh, thanks. Hopefully, I don't destroy your readership here.
But yeah, I'll link to those interviews in the show notes. So you can go to tradingheroes.com and check out the resources section to find this podcast if you want to see the other information. But we do need a little bit of background. If you've never heard of Steve W. before, tell us a little bit about yourself. How'd you get interested in trading, and what's the path that you took to become a professional independent trader?
Well, I never really planned on this, and I kind of stumbled on the industry. And also, I don't know about independent. I mean, I work with a team of guys now,
Okay.
but I'm in Colorado now.
Mm-hmm.
I love it here. I lived in New York for 10 years. I moved to Colorado after I got married. It's a perfect fit. So,
Nice.
I stumbled on it because I was in college and I needed money. So just a regular college stuff. And so I was working as a bartender and it wasn't doing the job basically. So I hit the paper and I found a kind of an anonymous ad, applied to it. Just called them up, basically found out it was for an investment bank in New York, and the position was basically just a trading clerk. You're running tickets, you're just basically punching a bunch of numbers into a computer all day, and
Mm-hmm.
it's totally entry level kind of thing. So, but I went into the interview and I got it, and I wasn't even 20 by that point,
Mm-hmm.
and I just ended up sticking around, and so everything was working out really well. So I was working on the risk arbitrage desk over there, and I was kind of looking at the lifestyle of these guys compared to pretty much everybody else that was working at that place.
Mm-hmm.
And they'd come in really early, they would leave early. Most of them basically made the most amount of money around there, and so I mean, to me it seemed kind of obvious. They're not staying there until midnight to finish a PowerPoint presentation or anything like that. So, and not to mention just everything they were looking at just looked really interesting to me. I thought it was really cool. So,
Mm-hmm.
so I kept on. I hung around. I became an analyst, and then and I started really taking an interest into trading, and I started looking at a lot of stuff on my own.
Mm-hmm.
And I ended up on the FX desk at another bank. a few years later, and that's kind of when the whole the snowball started to roll, I guess. So I just one step at a time ended up working for a hedge fund for a while, and then just sort of went on my own at one point. And so since then, it's like a whole different experience. Trading is not trading, and when you've got your own business, it's completely different. And so over the course of probably like the past 6 years, I've morphed in a couple different ways in terms of like what I've been doing and things like that. But so that's pretty much how I started, though. It's kind of a not your typical route. And but what is
Yeah, that's true.
You stumble into everything, so very few people go out and grab something and actually end up achieving it. I think there's kind of a small percentage of the population that actually ends up doing stuff like that. So but anyway.
Cool. Yeah. Well, you talk about morphing a couple of times. That's something that really interests me. Is there something about those experiences that you could share?
Well, I just meant in terms of the business, because any business owner, when you start a business for the first time, it's you're in a whole different world. You're dealing with clients one-on-one. You're taking care of every component / aspect of the business, and so there's a lot of things that you're just not ready for. And there's no book that's going to basically tell you how to get ready for any of that kind of stuff. And so in terms of morphing, trading wise, we had I made a lot of adjustments to the systems and strategies that were being used because a lot of it boiled down to investor needs. Everybody demands something different, and ultimately, it's return a profit and don't show me a lot of volatility while you're doing it. And the way to do that is to just basically diversify as much as you can, while keeping your risk in check. But stuff like that, though, there's a lot of unknowns, and like I say, the whole act of starting a business is different than learning a particular. It's a skill set unto itself, So obviously,
Okay.
So
interesting. So I guess that kind of brings me to the point of how does what kind of trading strategy do you have? What time frames do you trade? How do you weigh fundamental and technical factors? There's already a lot of good information on your site, and people should check that out. But if you had to give like the elevator pitch for that, what would you say?
The elevator pitch. Well, number one, the time frames stuck out. Time frames I always kind of find irrelevant. It really doesn't matter.
Okay.
It actually does in a sense. One thing that if you read my stuff, when I talk about especially the price action based strategy, I always recommend going down and drilling into lower time frames. And the main reason for that is higher time frames are going to mask things that you can't necessarily see on lower time frames. Now, then again, I'm also very anal retentive about how I derive my numbers and where I'm getting in and out and everything else. I like a thorough analysis. If I feel like I'm missing something, I take zero action. And that's a time given thing. But as far as timeframes go, yeah, just the big take home is drilling down into smaller timeframes because again, those higher timeframes hide a lot of information. And when it comes down to drawing a level, we've been talking a lot about measured moves on my site lately. Even a lot of those measured moves, they're derived from points of confluence throughout the course of a trading range or a trend. They're very accurate when they're done correctly, but in order to get that kind of accuracy, you have to spend the time digging down into those lower time frames, and just so you're able to see everything with clarity, basically. So strategy, fundamentals, and technicals. You can't trade this market, in my opinion, on technicals alone. Technicals are always to be considered a guide, in my opinion. It's certainly possible. When you're completely data driven. I know quite a few quant traders now. Especially recently, I've been working on some projects with a few of these guys, and they're completely data driven, and so. But a lot of their data is also coming from sources that a lot of retail guys will have a very hard time accessing or translating it not just accessing, but translating it into something that they're able to use. I mean, they're a sophisticated group. So data-driven strategies can and do work, but like anything else, they're going to have their weaknesses. And but as far as any kind of discretionary strategy, again, fundamentals just are. You have to understand human behavior and how humans react to news and events. Buy the rumor, sell the news. It's an old expression. It is an overused expression, but there's a lot of truth to that. I kind of translated on my site to expectation versus reality, because that's basically what you're doing. You're expecting an event, and people are trading the expectation of an event. They're not trading the event itself, unless that event comes as a surprise. But they're always trading the expectation of the event. So no matter what it is, there's always a certain level of anticipation preceding it. And so everybody's basically trading the expectation of that event happening. And when the event actually occurs, if it comes in line with expectations, usually the reverse happens. So for instance, a lot of newer traders will say, oh, okay, this is bad for the euro. Euro's going to go down right now. Well, no, euro's been going down for the past 2 days already. Okay. Why is euro increasing on this news event? It's because the expectation has been priced in and then some. And then once the news release actually happens, or whatever's happening, euro pops higher because of that, preceding fact. So that kind of stuff. That's very important to understand. And I would tell everybody that I've trained in the past, basically, just, it's just a handful of guys now, but is to understand that concept more than anything else, because that really is what tends to mislead a lot of people. They tend to think that I have a bunch of numbers here, fundamental data, and based on this fundamental data, price is going to rise or price is going to fall. And no, what you need to look at is what's happening in the future and what the expectation of those events are. That's what's going to cause price to rise or fall, in my opinion. So that's a very important factor.
I see. Great points. Yeah. I see a lot of people, especially with like higher economics or finance degrees, looking at the market that way. But yeah,
it's interesting because I'll read all these scholarly papers about all sorts of economic theory that's out there. Just think about the number of things that got tossed out the window with the last recession. Everybody said, why are all these higher yielding currencies dropping right now? Aren't they supposed to be going up in a bad situation like this? And well, no. We have our whole risk on, risk off theme that came into light, especially during 2008. And now it's a norm. Now it's a standard. And preceding that, there's just so many theories out there that basically said that won't happen. That's not what happens. And we have the data to prove it and everything else. So it's a constant cycle of renewals. So
yeah, good point. Definitely. So about how long did it take you to become consistently profitable?
Consistently profitable. I don't know. I never really consider myself consistently profitable because the reason, the reason is because you can't really. I know that expression gets thrown around a lot. You're constantly on your toes. You can't. You got to do your job. Trading is a skill. It's a profession, just like anything else. People are doctors, lawyers, or whatever, and it's a skill that's constantly needs to be worked on. Guys that read my site, I recently had a surgery on my hand, and I couldn't help but think, I'm sitting there after this injury. I'm sitting in there. I'm about to get surgery, and this doctor is there. Every case is different, and he's looking at my situation completely different than he would any others, because I had an injury in a pretty bad place on my hand. It's not the kind of thing that and so it requires different needs and different attention and everything else. Not to mention, there's never really a point where I think you can sit back and consider, oh yeah, that's when all the lights went on and everything else. If there was a point, it's basically when I started just looking at conventional thought. In other words, there's a lot of teachings out there that basically everything on my site, put it this way, everything on my site is basically just a modification of stuff that's been done in the past that fails, and I'll look at and I'll say, well, how else can we do this? What does work? What's a different way to do this? And you dig in, you start playing with stuff, and eventually you say, holy smokes, that actually, we've got something here. Or if I find myself wasting too much time on it, I'll just drop it and leave it for dead on the side of the road. I mean, so until I started really taking that train of thought and dismissing conventional thought, and looking, most importantly, what I would do is I'd look at price turning points, and I would say, why is price turning here? Like what's going on? I want to know exactly why price is moving here. And I just basically sit there and stare at that number until I figured it out. And I'd find related resources and dig through them, and anything I can find. I read a lot because there's always something new, and that I'm learning, and it never really ends. So
yeah. Is that the fun in trading for you?
That is the fun in trading. Yeah. I mean, it's interesting to me. I have a lot of, because if this is a repetitive job, really. I mean, yes, there's different things that happen every day, but your routine can become pretty monotonous. I mean, it is pretty standard. So, you need to break it up with something. And so that's why I do start, I go out, I look around, and, I love reading. I love finding out new stuff and seeing what other guys are up to, latest advancements, all that fun stuff.
Yeah, that is fun. Well, you talked about, you trained a few guys, and obviously you meet a lot of people through your site. What are some of the biggest common mistakes that you see aspiring traders making?
Well, I mean, there are a few, obviously. I'm trying to think of. Actually, there's well, I just signed up. I don't sell product on the site. I don't mix business and anything. But the is a partner we just took on, Order Flow FX. I think they're going up next week or something. They actually had a really good outline of this question. Probably about a week ago, they sent me all their stuff. But one of the things that stuck out in my mind was that they talk about they basically they offer client-side order flows, so you can basically replicate a market-making model. And so they, through all this testing, they basically said, one of the biggest killers was just excessive drawdown, and leaving that drawdown open. That's probably, obviously, one of the worst things that anyone could possibly do. Anytime your risk-reward gets defunct, you're going to find yourself having a really bad time. And so, and it's not that, again, I've said this on my site plenty of times lately, but it's not that people don't know that they need to exercise good risk reward. It's not that it's that they just don't know how. They don't have a strategy that can adapt to a good risk reward scenario consistently. It's because they can't identify where price is turning, or better yet, where it's going. I put a ton of emphasis on taking profits. The point of any trader, or the job of any trader, is you're forecasting price action. That's what you're doing. That's your job. Okay, it's not to figure out where you're getting in the market. It's your ultimate job is to forecast a large chunk of price. So, a lot of people say, well, you're never going to know where price is going to go. And I disagree. That's why are you spending so much time worried about where you're getting into the market? Why don't you spend more time understanding what price is going to do, in the relative area that it's sitting in right now? So, again, that's why I'm putting so much emphasis on, measured moves and everything else these days, because it's a huge topic of interest. The more conversations I have with people that come through the site, and this is why I do it. I mean, I always find it really interesting just to hear all these different stories, and not to mention a lot of people take my ideas and they tweak them, they change them, they come up with ideas of their own, which I love. I think that's awesome, and that's probably one of the things that really keeps everything going for me. But just finding that ultimate point where price is traversing is really what you need to focus on. Entry points are easy. They really are. The entry points should not be difficult. You can use anything you get in the market. There's tons of different ways. And I know it sounds like, maybe it sounds, this comes off the wrong way, but I mean, it really is true. Once you know where price is heading or have a solid understanding of that concept, then getting into the market is really the easy part, because again, there's just so many different ways to do it. And then, but yeah, these guys, so that drawdown factor that I was just talking about, that's definitely obviously one of the most detrimental things. That's how most market makers are going to make the bulk of their money. When you talk about retail brokers and, on that follow that kind of model, that's where they're really cleaning up. That and overtrading. Overtrading is actually, there was a story that one of the guys I work with, he told me the other day. I have like a catchphrase on my site I post all the time. It's take the easy ones and don't do anything stupid in the meantime. Saying it for the past 5 years, and it's easier said than done, obviously. Yeah. But basically, another way to say it is this guy. He just told me the story yesterday. I thought it was pretty funny. He's telling me about the guy that taught him how to trade. Told him that think of a cheetah. Okay, a cheetah doesn't basically wake up every day and immediately start killing everything that he sees, a rabbit, or a gazelle, or anything like that. Take it all back to his cave and throws a big party with all of his friends. What he does, he'll only go hunting when he's ready to hunt, and he's hungry. Number two, when he does hunt, he's going to go after the gazelle with the broken leg or the limp or the easy prey, so to speak. And so. That's really all you got to remember, and when you got it, take it, so I thought that was kind of funny that he mentioned that. But finally, there's one more thing that I notice a lot. Sorry, this is a topic that gets talked about a lot, but I think
this is great.
It never stops, because there's just so many dumb things people do, and sorry, I'm not sounding more sympathetic here, but I mean, really, it's just stupid. You see, and it mainly happens around interest rate announcements or any kind of change or fluctuations in rates. It's a misunderstanding of fundamental information, and again, it's not usually employment. It's not usually it always relates back to rates. So when you're talking about inflation, or a Fed official is saying something about we're keeping rates unchanged or anything like that, price will spike higher. And then it basically blasts into a huge support and resistance zone. And everybody says, "Oh, buy low, sell high. Price is high right now. I'm just going to start selling this thing." Well, what happens is obviously, there's a misunderstanding of that information. Price doesn't reverse. Price just keeps on going, and it just plows right through that level. And just you don't mess with rates. That's if there's any fundamental rule that I have is that you don't screw with anything that pertains to a change in rates. Nothing. And so but basically that misunderstanding just has people trying to fade price all the time when they shouldn't necessarily be fading it. And conversely, when price is in a trading range and it's just sort of meandering along, because they've been burnt before in those situations, they'll think price is going to break out when nothing's going on, when in fact now it's time to fade. So there's just sort of that, that's a huge one. That's what causes all that drawdown. Most of the time is stuff like that. So
no,
that was a long answer, man.
That was great. That was awesome, and I can actually I can totally relate. Like in the earlier days, I would try to play the balance, and then it would break out, and then I would realize later, it was an interest rate or there's some sort of news, and I had no business trading at that point, but.
Well, that's the thing. Yeah, I mean, it's there's that volatility just gets everybody excited. Buy side, sell side, doesn't matter. Everyone wants in on that stuff, and that's why volumes spike like crazy. And but for every buyer, there's a seller. And somebody's always on the other side of that trade, and those are the days they're cleaning up. And unfortunately, again, it's just that misunderstanding. It's just don't screw with rates,
Yeah.
or anything you don't understand.
Hmm.
I'm constantly kind of astounded at just the number of things that people ask. I'm just like, why don't you just Google it? Just figure it out.
Exactly.
Just understand it.
Yeah.
I mean,
Yeah.
there's tons of resources out there on the internet. You can find anything. Find a reputable source and figure it out.
Hmm.
And don't do anything until you do. And again, it's talking about those um, price behaviors or just behaviors with human behaviors, and
Hmm.
excuse me, in terms of digesting information and everything like that. That plays a crucial role in that. So once you understand the concept, you don't understand how a bond auction works, figure it out.
Hmm.
Once you understand that, understand how that bond auction relates to how that translates into the prices that you see on your chart. Go back through your history and figure it out.
Hmm.
So that's all I mean. So, before I,
Cool. Yeah, no, that's
sorry,
some great points.
you know.
Um, well, kind of on that topic of drawdown, in one of your interviews, you mentioned that you had an experience of about 2 months where nothing seemed to be working, and that's going to be always the case with any trading strategy. But how did you, or how do you handle those situations, and how do you recommend other people handle it?
It's probably longer than 2 months, number one, because I don't think
Hmm.
any situation like that goes away in 2 months. Maybe just the worst of it.
Uh-huh.
And it's hard to say because there's, when the damage is done, the damage is done.
Hmm.
You
Hmm.
know, and usually damage, stuff like that happens after winning streaks.
Mm.
That's an emotional response. You get high, you're euphoric, and then next thing you know, hell breaks loose. And because you're overconfident. I mean, that's, once again, it's another cliche thing people
Yeah.
talk all the time. But again, with all those types of cliche expressions that people use, have discipline and all that other kind of stuff. The way out of it, in my opinion, is just have better knowledge about what you're doing. I When you first start trading, you tend to think that emotions are kind of the number one driver of poor decision making and things like that,
Hmm.
because what we're innately conditioned to do as humans seems to kind of flop upside down on its head when you become a trader. I disagree with that, though. The reason I disagree with that is because I've seen firsthand what happens when you explain things to somebody in a manner that makes sense objectively.
Hmm.
Okay, and forget about emotions. I mean, you can sit somebody down. You can show them where and how price is turning and where it's going to go to next and how you came up with that information.
Hmm.
Trust me, that emotional factor, and think about psychology and everything else. A lot of that goes out the window in a matter of seconds.
Hmm.
Because they say, because the light bulb goes on. They say, oh, okay, yeah, I get that, and I feel as though a lot of those emotional and psychological things, some of them are obviously legit. I mean, we're humans, we have emotions, and obviously they're going to come into any business, and they do, and especially in trading, when it comes to understanding how price moves.
Hmm.
And that's what I meant about, once again, this is the third time I brought it up, but understanding those human behaviors. The way you do that is you basically look at the event, and then you just go back and you start drilling through, and you say, what happened on this day, what happened on this day, what happened on this day, what happened on this day. It's not a fun exercise.
Hmm.
There's nothing sexy about it. It's boring. And but at the same time, what you're doing is you're objectively dicing up information. You're coming up with, you're getting data.
Hmm.
You're collecting data. You're understanding more about how price is behaving in that way. So when it comes to getting out of a rut, again, I think a lot of it just boils down to understanding those behaviors as best as possible. And if you're not doing it, then obviously something else is wrong. Usually that something else has to do with, usually it's a lack of work ethic.
Hmm.
It's a lack of concentration, digging in,
Hmm.
interest, things like that.
Hmm.
That's usually what it boils down to. From what I've seen, I think it's just I think it's kind of laziness
Hmm.
in a lot of ways. So,
I see. Good point. Well, if traders want to create should traders create a routine, or what do you how do you treat your trading day?
Uh, what's my routine, you
Yeah,
mean, or like
yeah, like on a
just
typical
what do
day.
I do?
Yeah.
It, um, it's kind of a constant cycle, really. I mean, the day never really kind of. I'm always kind of poking at something, whether it be on my phone or, when I'm at the office. The standard thing is, I almost always look at charts the previous night,
Hmm.
and I'm just looking at charts. Any other data that comes up or anything like that, I have alerts set up. I've got a Reuters feed that gives me pop-ups basically anytime anything is important is happening based on the filters I have. So I'm always basically on top of the news. You
Hmm.
never want that's always number one. You have to understand what's going on out there, what people are actually trading,
Hmm.
other than technicals, because technicals really are just a guide. Um, and so as long as you're on top of the news, pretty much at all times, you have a much better understanding of how price is moving in relation to that information.
Hmm.
Okay, we're talking about this a lot today, but no, I mean it really is relevant. And then, so yeah, when I get in the morning, of course, then I'll drill down into the news feed even further. What I'll do is I go through charts basically one at a time when it comes to technicals, and I want to basically find as much clarity as possible. I'll take I've got software that just basically runs and finds out basic price patterns, and the only reason I do that is just to basically get my head in the game,
Hmm.
and just so I can better visualize what's happening, because it does take a minute, and when you do it on your own it's kind of hard to force the issue, or at least it is for me,
Hmm.
to just sit down, look at a chart, and start going to town on it immediately when I start the day. So that's the base coat of paint, and then I'll just start drilling down more and more, and I'll use a number of different strategies, from the discretionary side, stuff that mainly I talk about on the website. The website is really just dedicated to price action trading. It's been that way since day one. I'm not even going to get into some of the other stuff that I deal with,
Hmm.
because I do a lot of, I was telling you earlier, I work with these quants now, and so these guys, they'll come to me because I've got more screen time sort of experience than they necessarily have. So, when they're out looking for another chunk of data, my job is to basically lean them into the right direction and tell them where to look for it,
Hmm.
and tell them what they should be focused on. And so, you know, so after I do all that, I've got a good technical guide. And at that point, it's just kind of a sit and watch kind of thing. And, you're basically monitoring any levels that you have throughout the day.
Hmm.
New stuff is going to come up all the time, as it does. If I've got a price target identified, I'll do whatever I can. I sometimes maybe too aggressively to try to get into the market in order to chase that price level.
Hmm.
And again, it's all about magnets for me. It's all about where is price heading to, and getting in. Again, I mean, you could draw a trend line. You get into a retest on the trend line,
Hmm.
on a very small time frame, or gosh, there's millions of different ways. That's one of the most normal ways for me to do it. Or if price is breaking out and I know it's probably not going to retest, I'll just enter, and that kind of thing. So, and then yeah, at the end of the day, it's just go home, do your thing. At the end of every week, I look at my activity,
Hmm.
and just kind of pour through it and see what went well, where I screwed up, and just basically try to rectify it as best as possible. Because every trade I take, like I know exactly, I know every trade I take. I can look at my statement at the end of the week and say, oh yeah, that was when X, Y, Z, or whatever the case,
Hmm.
And if there are any issues, or there's a misunderstanding about, again, some kind of fundamental issue that's going on, which is usually when I take hits, that's usually what happens.
Hmm.
Because again, it just evolves all the time. So. Just evaluate it and go back and do your best to rectify it. But
Hmm.
at the end of the day, it's your risk reward that really bails you out. So And, I can't stress that enough.
Uh,
So, and that's pretty much what I do. I mean, it's not very complicated. A lot of the accounting and all that other stuff, the regulatory stuff, since I about 2 years ago, I started working with these guys that make that my life about a million times easier as far as all that's concerned. So I don't really have to worry about that anymore, which is phenomenal.
Yeah.
So, yeah.
Cool. So just getting back a little bit to reviewing your trades, do you do a formal journal, or do you just kind of look at your statement and say, well, this is what happened?
I kind of look at my statement and say, okay, this is what happened, and then I take notes. I mean, I guess, I don't know if you call it a journal. I mean, I'll just, I just like to, what I'll do is I'll print out my statement, and I just put handwritten notes on it, and I kind of collect them in a pile on the right side of my desk here. And so, that's all I basically do. The trade plans and the trade journals and things like that. Again, like the retail side, I think there's way too much emphasis on a lot of that stuff. I mean, I used to work for one of the largest hedge funds on the planet, and these guys, I mean, very few of them kept any kind of like journal or anything. Yeah, I mean, it's not, it's just not a. I mean, they have tons of notes, supplementing, every trade, a lot of the trades that they're taking, because it was long short equities, but I mean, it's just a lot of that stuff gets overrated, and in my opinion, because everything changes all the time, and you're going to adapt when you're ready to adapt, and when you understand things differently, or you're seeing things in a different light. That plan that you wrote 6 months ago is just basically going to get flushed down the toilet and go out the window. Now, maybe other people find better success with stuff like that. I necessarily don't, and I never really have, but that could just be, my nature. I don't know. So, just focus on the most important thing, and that's P&L. So, I mean, that's the bottom line.
Yeah, that's true.
That's common sense. I mean, so.
Yeah, and I guess it just comes down to what works for you, and if it doesn't work, then don't use it. But don't feel guilty just because somebody said you should be keeping a journal or whatever, right?
That's the thing. Yeah, I mean, again, the entire reason we're having this conversation right now is because there's an entire retail market set up to it's all marketing. I mean, just individual traders get sold to, ridiculously, and on the institutional side, the worst headaches you got to worry about is an email and a phone call from that guy from FX All every once in a while, and you're like, oh crap, not him again.
Yeah.
And but on the on the retail side, it's just everything's in your face all the time, and don't sit in your chair with your foot pointed towards the wall, or you're going to take losses for the month, and like all these stupid rules.
Yeah.
I mean, and so again, that marketing arm and that component, just it causes so much trouble for so many people, because experts, quote unquote, they're not experts, that sell product and things like that, dictate that people should be doing certain things, when in fact they've never applied any of this stuff successfly, and I mean, how can you trust anything like that? And that's why I tell everybody, that comes to my site, and it's just, get off at dailyfx.com. You're not going to learn anything valuable on there. Pick up go to a scholarly journal, and just start reading quality stuff. Just dig through it, understand order flow, understand market mechanics. Take hints from people that have actually they're strongly educated. They're serious. They're institutional. They understand they understand real trading, not online marketing. So and it's very it's frustrating, because I mean, I face all the time with my blog, because obviously my blog attracts a huge retail segment, which I like, and I like that fact that I can kind of, provide maybe something a little different than what's out there, or people are used to, or that kind of thing. You know what I mean? So.
Cool. Well, has your
another rant?
Yeah. Well, no, that's good. It's good to get that information out there. Has your blog helped your trading at all?
I can't say it hasn't. No, I mean, yeah, I mean, if I'm going to be honest about it,
Hmm.
here's how it works. Like, if you write down anything in detail,
Hmm.
you're going to start to question things that you've never really thought about before because it's staring you in the face.
Hmm.
So when you're writing about your strategy, you're going to come up to a paragraph and you're going to say, yeah, I got a problem here.
Hmm.
You know, I've got a hole that needs to be filled. And there's a reason my blog only gets updated like once a month or a couple times a month or maybe even longer.
Yeah.
It's because, I realize that, yeah, I've got issues, and, also I'll go back and I'll do the homework until I know that whatever I'm posting up there is, I've filled as many gaps as possible,
Hmm.
basically.
Hmm.
And nothing's going to be perfect. It never is. But I also like people to be able to read whatever I write and be able to go into a chart or, into a news feed and translate it almost instantaneously. If
Hmm.
they can't, if they have trouble rectifying it, then I know that not only I've done a bad job, but what I've written is basically it's harmful, you
Hmm.
know. And so I know how people translate information that goes online because I've been doing this for I've had that site for like 5 years now or something like that,
Hmm.
maybe longer. But um, so yeah, in a sense, in that sense, it definitely has because again, when you're writing stuff down in that on in any level of detail, you're going to discover issues that you might not have necessarily discovered before.
Hmm.
And so then you go back and just this whole new level of curiosity opens up, and you start the creativity comes into play, and you start playing around with new different things, and so it's interesting, and so yeah, I mean it definitely has
Ah,
ultimately. So
very cool. What's the best opportunity that came your way as a result of your blogging?
opportunity,
Yeah.
as in, what do you mean an opportunity?
Maybe somebody influential that you met, or something that helped your trading, or something like that, or a business deal.
Business deal? No, no business deals. No, I've never. That's one thing. I've had that rule since day one.
Yeah.
When I started the site, I said I'm not going to promote business on here,
Hmm.
and and I anything that has ever perspired from that site that's been that way. It's just there's just way too many conflicts of interest,
Hmm. Hmm.
and people that want to learn how to trade versus those who are clearly have zero interest and just want to invest should be in two totally different
Hmm.
categories as far as I'm concerned, because there's a completely different level of sophistication there that so as far as opportunities through that site goes, I'm just going to say that basically, you know, I have, in a sense, kind of had that pleasure of, meeting all these other, different people across the planet, really,
Hmm.
um, that have, helped me in a way because when I do post stuff, I like I said earlier, I like people to enhance it. I want people to work on it. I want
Hmm.
people to take the problem or the solution or whatever it is and make it better. And that's one of the reasons I really enjoy doing this is because when you get your ideas out there, uh, you're open to criticism
Hmm.
and you're open to improvement, which is awesome. And so that's why I always encourage people to, like, at the end of a lot of my posts, I'll say, you find a better way to do this, you let me know.
Hmm.
You find any other little nuances or anything else, post it in the comments. Like, let's talk about it.
Hmm.
Because it's just fun because there's a lot of really bright brains that pass through that site,
Uh-huh.
and I really like that about it. So that's it's rewarding and it's fun. It's a hobby.
Yeah.
Writing is a hobby,
Yeah.
and so hopefully, I've kind of explained like one of the reasons why I really like writing. It's entertaining for me. So, you know,
Oh, cool.
entertaining, but
Yeah.
in that sense, you know what I mean.
Yeah.
So,
What
yeah.
if you're getting something good out of it, then that's great. That's the best thing. This might seem like an odd question, but is there a FX related service or software, mobile app that is not available right now that you would love to use?
Um, Not mobile app, but I mean, mobile app, if something else is creative, somebody's going to write an app for it. But um, I just think in terms of development of the industry as a whole,
Mm-hmm.
I would like to see more advancement, which is happening. It's becoming more and more. This market is becoming more and more quote unquote fair as time goes on.
Mm-hmm. Mm-hmm.
And I don't find it necessarily a function of government regulation as I do technology advancement.
Mm-hmm.
And what I mean by that is just in terms of access to depth. I'm talking about price discovery, order flows.
Mm-hmm.
That there are two things that run basically everything that happens in front of you is it's order flows is a function of, or excuse me, price action is a function of orders that go into the market. That's where everything starts, obviously.
Mm-hmm.
And so the closer you can get to that source as possible, the better you are off, really.
Mm-hmm.
That's why a lot of indicators that everybody says, oh, indicators are evil, they're the devil, and blah blah blah. I don't think indicators are rotten. I just think old indicators are rotten, because those indicators are written for a different market and a different time period. They might have worked back in 1950 when they were made, but they don't work now because
Mm-hmm.
we're in different circumstances. Price is more liquidity. Price behaves differently.
Mm-hmm.
More participants are aware of these factors, and so that's why I say, I guess really the next step especially for OTCFX is just more transparency, which is becoming apparent.
Mm-hmm.
Basically, all these ECM platforms that we have now, every single one of them offers depth. Whether it be Hotspot or FXall or actually, I don't know about FXall. I haven't used that. CurrentX definitely does. Integrals platforms, they're huge on that.
Mm-hmm.
They're big advocates of it. So that's basically where I'd like to see things continue along that path.
Mm-hmm.
So, yeah.
Okay, cool, interesting. Finally, I'd like to talk about how you develop and test your trading ideas. Is there a process that you go through, or when do you know it's finally time to implement them in live trading?
Well, that's just trial and error. I mean,
Mm-hmm.
over time, there's no real secret recipe or anything. I mean,
Mm-hmm.
you're just basically plugging away until you find what seems to be working on kind of a more macro scale.
Mm-hmm.
Once you identify that, you kind of use it. I'm unique in the sense that I try to, I never try to use what other people have taught me. There's one guy, one of the first introductions I had to technical analysis was Tom DeMark. I don't use any of his stuff.
Mm-hmm.
All right. The thing I learned from that guy, that's probably the most important, is the fact that it's okay to let go of conventional wisdom, and it's okay to go out and find your own way of doing things,
Mm-hmm.
and be creative and figure out what works and use it. Now, that being said, there are certain things that you can teach other people that can be applied pretty much instantaneously and used successfully because they have been proven.
Mm-hmm.
Now, in terms of actually finding that kind of stuff, though, there is a process. It takes time,
Mm-hmm.
and again, it's trial and error. And I said, leave it for dead on the side of the road earlier, but essentially, you waste a lot of time on a lot of those dead items. But without those dead items, you would never come up with anything that works, obviously. So,
Mm-hmm.
As far as any specific process goes, though, no. For the systematic stuff, there is definitely kind of a process that gets followed. It's definitely more streamlined.
Mm-hmm.
There's different stages, just like you're coding any other kind of software. You've got the sandbox all the way up to production. And so it's kind of the same deal.
Mm-hmm.
And you just go from one stage on to the next. As far as a lot of the discretionary tactics, I'm not going to tell you that I've really followed much of that kind of process. A lot of it's just been it's more of a function of time. I could probably have cut my time down if I did follow more of a process, but again, it's just I have to know that something is working very confidently before I'm going to go and try to implement it.
Mm-hmm.
And again, just the stuff that goes on my site, especially these days, I'm way more conscientious of it because as the site has grown, um, your likelihood of finding more and more people implementing your stuff increases, So, that's why it's important for me to kind of tread carefully and just, obviously it's, you don't want to mess with money.
Yeah. That's true.
I mean, think about it. There's any kind of business that, they do cost analysis. What does it take to you think of a manufacturing business? What does it take to manufacture the product? Whether that be employee salaries, time invested, any kind of R&D, materials to actually create the product. So, those costs, when it comes to trading, those costs are, time is a cost, obviously. And, you need to minimize those as much as possible. And the only way you're going to minimize those is if you basically, your only way to really do it is just to stay idle until, you find something that's going to work. That's why we backtest. That's why we look at, that's why we trade monopoly money, in order to make that happen. So that's really the big scheme of things there.
I see.
Yeah.
Okay, great. Are you constantly trying new ideas, or are you more focused on refining existing ones?
Anything that's been refined is already, I mean, everything's basically implemented. I take one thing leads on to the next, basically. It's a chain of thought, and concept. So one thing, nothing really eye-opening here, one thing will just kind of go on to the next, and I love looking at new stuff. Yes, all the time. There's something. I just set up this board on his site, and some guy reminded me of something that I saw years ago, and I said, "Oh yeah, what about that?" I remember seeing it, but never really exploring it in much depth. So I'll dig into it further, or again, I'll read a paper, and it'll trigger something, and I'll say, yes, yeah, I need to look into that more. A lot of volume studies I've been reading lately, especially, and mainly in regards to the high frequency trading strategies. And these guys will, most of the time they'll find better returns that are proportional to higher volume periods. So basically, it's your large range bars, with higher tiers of volume surrounding certain types of events. And so for instance, that thought took me kind of on a whole another different path that I've been working on lately. And it's great to have other guys that I work with. That is a disadvantage for individual traders or any kind of retail traders. Just I encourage pretty much anybody as much as possible to talk to other people or find other people that have a good level of intelligence that can really work with them. And again, a lot of people pay for these types of services, like you got these mentoring services and all this kind of stuff. And I actually find better value. Just you're sitting there, you're talking. You're going to find way more value if you're talking with a bunch of, say, all your friends. Nobody's profitable. Okay, you're going to find more value working with 5 guys that are unprofitable than you will from a quote unquote guru or whatever the heck you want to call them, because you're learning. You're learning directly. You guys are figuring things out together, cumulatively, collectively. Whereas the guy that's selling the product or doing whatever, all he cares about is your $100 a month or whatever, and he's just basically going to take and it's constant game of cat and mouse kind of thing. So, but you're never really learning anything because you've got one person that's completely honest and the other one isn't. So that's why I say it's just completely. It's really important to work with people that are just down to earth, realistic about certain things, and you guys can just work through stuff together. That's really what helps me the most. My friends, they trade the grid, electricity. They trade energy, nat gas, and things like that. And so I find that market so interesting. And I've learned stuff from them from that market that I never would have come up with on my own.
Hmm.
Coming from foreign exchange and global macro side of things. So again, it's just I think the honesty is the most important thing that you can really focus on. Just get to the freaking point, you
Hmm.
know, just get to the point, get it done.
Hmm.
So, and I just I'm not a fan of nonsense when it comes to stuff like that. Obviously, people that know me better, So
Yeah, no,
anyway,
that's why people like your site. Any thoughts on finding that kind of a peer group? I mean, because a lot of people don't really have
I
any
mean
friends
that's
that
that's a
trade.
good question. I mean, I I used to have like a chat room on my site to kind of facilitate that kind of conversation. It's difficult. Most people find each other through forums and stuff like that. As far as this individual trading segment is concerned,
Hmm.
it's very It's not easy. I mean, I'm not going to say it is. Just for me to find people that actually do what I do, for instance, here in Colorado,
Hmm.
was very difficult to do. And I got lucky. I stumbled across a good friend of mine. And it's not easy. And but it's like anything else. If you open your mouth, if you talk about it, if you start something on your own, you want something, you go out and get it, kind of thing.
Hmm.
It'll come. So, um, just be as communicative as possible, and more importantly, there are other forums out there that aren't that attract a more astute crowd. There are,
Yeah,
they exist. I
yeah.
mean, I'm on them.
Hmm.
And these guys, they work for banks, they work for hedge funds, they work for, these are really, they exist. Find them, and go after them. I don't know if the owners of them would like me, publicly, blabbing out right here because it's, there is kind of a thing there, but just Google them, you'll find them, I think.
Yeah, yeah. People should do their
Uh,
research.
yeah, and just you will find people that are serious about it, more sophisticated and things like that, to kind of team up with. Even guys that trade on retail platforms. I mean, good God, some of the stuff I see that's written for like MetaTrader.
Hmm.
I was looking at a stat arb strategy I stumbled across not too long ago.
Hmm.
Um, that was, really sophisticated, written by this Russian guy, that I was kind of blown away by because he understood something that very few people understand. One of the keys to that kind of strategy is understanding the correlation component between different instruments.
Hmm.
And so he figured out there's something called a Pearson equation that you use to basically um, relate certain things or find common behaviors among certain things so that they will recouple and come back together, and that's how you make money.
Hmm.
You buy one, sell the other, kind of
Yeah.
thing. And so pair trading is another word for it, but not necessarily. You can stat arb. This is just there's 5 billion different ways to interpret that category. But anyway, getting back to my point, this program, I was just kind of blown away by the sophistication of it, and like I say, it's just this kind of stuff is out there. I would just recommend going out and
Hmm.
finding it,
Hmm.
So, and because it's true. I mean, individual traders definitely have it bad because again, their constant stuff is pushed in their face all the time.
Hmm.
That leads them down an incorrect path, and the stuff that is not pushed in their face is the stuff that's usually going to help them.
Hmm.
So, yeah.
Okay, well, some great tips. Thank you very much.
Mhm.
We're coming up on an hour, so I guess we're running out of time. But thank
Oh
you
yeah.
again. I really
Yeah.
appreciate you coming out to talk to us. You mentioned you have a new discussion board, and people can check out your blog. Is that the best place to come in contact with you?
Yeah, I mean, I set up the board because I thought it would just. I'm always looking, like I was saying earlier, I'm always looking for people to refine ideas when it comes to, especially when it comes to just trading price itself,
Hmm.
and hone thoughts and just excuse me, just basically improve on strategies that have been written, talked about, and so on and so forth. But
Hmm.
the the board was set up just basically because I thought it'd be a great place to basically pool stuff that I'm interested in. So it's definitely obviously kind of self-serving,
Hmm.
but at the same time, like I know the level of work that I put into this kind of stuff, and so I'm able to vouch for value and everything else. And so I thought it'd just be a good thing to just kind of facilitate discussion and get things going. And and as I say, anybody can come and just check it out.
Mm-hmm.
Yeah, the blog is nobraintrades.com. There's links to the board on there and all that stuff. But again, it's always been a hobby of mine, but it's a rewarding hobby. It's something I really enjoy doing. So, and that's basically what's kept that thing going for this long. So, with interruptions, obviously.
Yeah.
Yeah.
Awesome.
So.
Oh, very cool. I really appreciate it. Any last words for traders out there?
Not really. Just remember the cheetah and the gazelle. I mean, I always go back to that, that expression and everything else. And just be patient, understand what's going on in front of you, be aggressive, Google, learn from reputable sources.
Mm-hmm.
That's all I can really say. I mean, that's the thing. There's just stay away from nonsense. So.
Okay. Awesome. Yeah. Thank you very much, Steve.
Yeah, thank you. I appreciate it.
Talk to you soon.
Okay, thanks. Bye.
Bye.
Thank you for listening to the Trading Lifestyle Podcast. To listen to all of the other episodes and get free access to Forex trading tools, tutorials and resources, visit tradingheroes.com.